Hey guys, welcome to Kiwin Learning, and this is Stock Picks. The stock we'll be going over today is PERI Network. This company is basically an Israel-based ad tech company providing engagement with monetization applications for web and mobile-based digital businesses. So basically, they're like the Google Adsense or just ads that you watch on YouTube that basically create those ads for you so that the creators of those videos actually can get money off of it. Anyways, going back to the actual stock, Perion Network with the ticker PERI in the past 6 months has been almost parabolic. Starting back in all the way in November, beginning of December, Perion has almost gone up 160% plus and has been doing extremely well. But in my opinion, I do think Perion has a lot more room to run. And here's just a few of my reasonings. Perion basically has right now just dropped right below their 20 MA, and I do think this week is a really crucial point for Perion. If they break upwards, I really do think that they could keep running for a little bit, but if they go back downwards, I really do think this is an extremely good buying point. In my opinion, I would wait till around 17.5 area, maybe closer to even low 17, high 16s to buy the Perion stock. Perion also has their earnings around March 8th, and this could be extremely influential on showing how they've been doing. Because as you can see here, Perion in the past month has done extremely well, going for almost $15 a share, all the way up to 19. But if you look at their past earnings, I mean, they've consistently beat it by a few cents here and there, but their last earning, they actually almost beat it by around 25%. And even on Yahoo, as you can see here, I mean, they have a 62% estimated return, which is crazy for any stock. And as you can see, they're also extremely undervalued. If we go over even to market beat, we can see that just overall in the past 180 days, they've had a consistent upside by around 2 to 4 analysts. And even now, even on the low side right now, they still have around a 6% upside with consensus price target at 21. But it's not only market beat. 6% is not too crazy because of the fact that I just showed you that Yahoo had a 61%. But what we really need to look at right now is that there's another three analysts on TipRanks, a site that I use a lot just to analyze gauge where I'm looking at for if the stock is undervalued or overvalued. And they have another three analyst ratings here, all rating extremely strong buy with another 47.7% upside. Again, this is really hard to understand that you have just, three analysts, they could say who they are, whoever, but you don't really understand what they might be doing. But to actually go more into depth with who the actual analysts are, I did a little bit more of my due diligence and looked over to CNN as well and found another five analysts here saying that they had a median price target of 30 with a high estimate of 31 and low estimate of 28. And the median estimate represents a 51.1% increase from last price of 1985, which is where they closed on at Friday. But as I was saying before, to go back to this, their earnings are on March 8th, which is a week from Monday, this upcoming Monday, and their current quarter and earnings per share is zero point 0.1. So not a super profitable company, but they did have $76.7 million in sales. And this is reporting May 12th, and MarketBeat's saying that they're reporting May 8th. So I'll update you guys when the actual date will be. But just know that it'll be upcoming in about a week or so when they report their new earnings. But to go on some back onto MarketBeat, basically to actually show you guys who's giving these types of ratings, we go over here and see that a number of analysts have weighed in on the stock. Zacks Investment Research, pretty well known if you guys have really done any of your own due diligence and have really looked at any stocks, you guys probably know of Zacks. And they did actually downgrade it from a buy to a hold on Tuesday, February 9th, about 2.5 weeks ago. But on the other hand, we have Roth Capital raising the price target Perion from $16 to $30. And they gave the stock a buy rating on the research report on Wednesday, February 10th, just a day after Zacks downgraded it. And you also see again, Lake Street Capital increasing the price target on shares of Perion Network from $18 to $30, also giving a buy rating on Wednesday, February 10th, both on the same day. And this is a little bit farther back, but the street of Perion Network went from a C to a rating of B minus on December 8th. So just putting these together and also looking at their overall full year report sales of 361 million and a huge increase in their entire fiscal year, as well as like their post sales and what analysts are expecting. I do think that Perion right before the earnings will most likely run up. And if they don't, then this might be extremely good buying point back for Perion because as I was saying, even though they have run up a lot here, I do believe that with their actual fundamentals and with how much they've been consistently running with their earnings, that they still have a lot more room to run here. And by the end of year, I'm looking at price target at least $30. But that's all I have today, guys. Hope you guys liked watching the video. Leave any comments and questions down below. Have a good day, guys. Peace.